Hey, Joe Mastriano, and this video today is on using estimates for your tax returns. It's amazing. I've done this since 1980. I've done tax returns since 75 when I was 20 years old. I worked for H&R Block while I was going to school. And even to this day, people don't file because they don't have the information. They're constantly telling their preparers that, well, I'll get it, and work is tough, and we got sick, and relatives, and this one passed away, and okay, just understand that whatever circumstances you allowed to stop you from getting the accurate information got in the way of you doing that. So the law allows you to estimate. You don't try to cheat. You don't put low numbers where higher numbers should be, or put higher numbers in expenses where lower numbers should be. But you can estimate. And by doing that, if you get any adjustments, then they won't be major. You won't have fraud, the 75% fraud penalty for severely underestimating your taxes. And I can pull your transcripts. I can get the wage and income information. So you will know what the IRS has on you prior to preparing the tax return. And I think anybody is a fool for not doing that. And you might say, oh, not me. I'm a simple return. I'm a W 2 only. And I take the standard deductions. But even then, I've had clients where their employers corrected W 2s, sent them in, and they didn't know about it, and it didn't match the return, and the IRS audited you. And now, when they audit you, they look at the year before and the year after, and things have changed in the last few years. The federal government is going after people at a much stronger rate now. I'm not going to discuss right or wrong. I just like dealing with what is. And what is you need to be responsible as a taxpayer. And a responsible taxpayer, in my opinion, of 40 years plus doing returns and dealing with thousands of cases, is that you get your wage and income transcript and know what they have on you, and you meet your filing requirements. And if you have to set up an agreement, understand what breaks the agreement. I have the majority of people that come to me that have had agreements before have no understanding. They think, oh, as long as I make my payments on time, everything's okay. But that's not true. New liabilities can come out. I've got a case now we worked on for 7 months, and the revenue officer is now retired, and um, apparently she didn't put a year in the installment agreement that had a liability on it, and I'm dealing with the new revenue officer. Fortunately, I've known and had other cases with that new revenue officer as well. The prior revenue officer that retired, I've known for about 25 years. Very important to know the people you're dealing with. Anyway, so many people have continued IRS problems because they don't do the very basic things like going to somebody who knows and taking an interest beyond just, getting it done and checking it off. Okay, I got my tax return done. File estimates when you don't have the numbers. Property taxes, mortgage interest. There's so many mileage. There's so many areas where you can use estimates and get the return done without looking at maximizing the bottom line. Following the rules are the name of the game. And as long as you don't do anything illegal, there are ways to interpret the law more in your favor than a lot of these returns I've seen already. As always, share my videos, because if you don't think this applies to you now, it might in the future, but people you share it with, this is going to hit home for. Thank you.